This is by far the best day trading strategy that you'll ever find on YouTube. And then if you're new to this channel, please click the like button and subscribe to the channel to show support to this channel here. So we have the 15-minute time frame as our black line, and then we have the 1-minute time frame as our red line here. And then what you need to understand is market structure on the 15-minute time frame, then switch over to the 1-minute so that you can take your entries. And we use supply and demand and liquidity to map out like our entries so that we can get those sniper entries, guys. But like, we're not going to get in on those nitty-gritty details, but like, we're just gonna go over them market structure so that you can understand it and then apply it on your trading so that you can get a bit better, guys. So as you can see here, the overall momentum is to the downside. As you can see here, we had this high here, then we had this low. Let me just change the color for this thing here so that you can see it. We had this high, we had this low, then we had this lower high, then we had this lower low here. And then after even that lower low, what you can clearly notice is that we had a break of structure within here. Then after even the break of structure, guys, you can see that the market internally was also pushing to the downside, just because we had this internal structure here giving us a low, high, low, high. Let me just change the color for the internal structure. Let me just make it black. So we had this low here, high, then we had this low, lower high, then we had this lower low, then we had a higher high, of which this is a change of character on the lower time frame. And then the market decided to push to the upside, giving us higher highs and higher lows up until we tapped into an area of interest around here, giving us the realignment, of which this was a high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we had an internal change of character again, giving us a higher high, higher low, of which this is an I chart here. And then an internal chart, I call it an I chart, but like, it's called an internal change of character, guys. So here we have the internal change of character, so that the market is pushing to the upside internally, guys, up until we tap into an area of supply. Then after we tap into the area of supply, that is when we expect a realignment on the lower time frame, of which it's the 1 minute. So as you can see, we had high, low, higher high, lower low, of which this is your internal change of character around that point. So I'm just gonna leave it like that. Then after even the internal change of character, you expect an area of interest so that you can take the market to the downside. Then after taking the market to the downside, then we have a new break of structure, just like that. Then the market comes with your lower lows and lower highs within the structure, guys. The internal structure, as you can see here, lower low, lower high, lower low, lower high, lower low, up until we break that structure. Then we come back to the overall outer structures. Like I told you, the outer structures are around here. As you can see, this is the outer structure. Then the market will just push to the upside again, tapping into an area of interest. So internally the market will just push to the upside, and then whenever it reaches an area of interest, that is when it realigns with the overall market structure. Same in reverse, guys. If you're looking for those buying opportunities, just because I made an example of selling opportunities. So let's say maybe the 15-minute decided to break structures here to the downside, just like that. Then we had another break of structure within here, showing that the market is pushing to the upside. Then after that we had a low. Then the market decides to change character around this point, and then at that point you'll be anticipating some selling opportunities within here, of which you're going to take a loss. Then the market will change character, and then that is unavoidable, guys, just because you will never know when the market will decide to change character. Then whenever it changes character like this, then that is when you're going to wait for the market structure shift on the lower time frame. But like, you're not going to enter around here, you're just gonna map out like your buy to sell candle within this point, or a sell to buy candle, just because you're looking for buying opportunities. Then on the 1 minute time frame, the market will just push down. You don't switch to the 1 minute time frame, same time you wait for the change of character to happen. Then whenever the market is around here, that is when you're going to switch to the 1 minute time frame, wait for that lower low and lower highs. So just like that. So let's say this is your low, this is your lower high around here, lower low, lower high, lower low, lower high, lower low. then we had a higher high just like that. Then that is your internal change of character or your market structure shift. Then that is when you start looking for buying opportunities at the demand area, taking out the previous high just like that. Then you have your new break of structure just like that. So after having the new break of structure, you look for the same thing, guys. You map out like your area of demand just like that. Then you wait for the market to tap into this area on the 15. Then you switch over to the 1 minute time frame. Then simple as that, guys. Very simple. So you lower low, lower high, lower low, lower high, lower low, change of character. Then that is when you wait for a tap into this area so that the market can just push to the upside. So I hope you understood each and everything that I've explained. Maybe I was a bit quick, but like I tried to make sure that you understand everything, guys. And this strategy here works on all pairs, but like I prefer you guys trading Euro USD and GBP USD, and lastly AUD USD. And then if you want to add it up, you can just check GBP JPY, guys. So let me just remove everything here so that we can look at the overall structure, guys. So this is the market structure on Euro USD, guys. So as you can see here, we can just start over anywhere. We can start over anywhere, guys. Maybe let's start around here, around this point. So as you can see here, we had our high, low, then we had our higher high just like that. So which means that this is your break of structure. And like I said, there is liquidity in this trading strategy. You add liquidity, your supply and demand, but like in this video I'm not gonna add those. So we had a break of structure, then this is your highest point, this is your lowest point. So this means that this is your trading range. From the low to the high, you have a trading range. So whatever is within here is internal, guys, up until you break the structure or the lows. So if you just look at the overall structure here, you can obviously see that this is your sell to buy candle, which means that this is your overall order block. And then it also has a imbalance around here, of which this is a gap here, or a fair value gap. And I like them like this. And obviously all the time you'll get a fair value gap followed by an order block, guys. So just like that, this is an order block, the market tapped into it. So you're on the 15-minute time frame. So whenever we get this tap, that is when you switch to the 1-minute time frame. I hope the price action will show on the 15 minutes, just because my trading view is not paid, guys. So let me just do that. I'm not back testing as much. So as you can see right there, let's go back into price action. Let's see if we can find it. I hope we find it, just because for the sake of this video. Okay, yeah, so we found it. So as you can see here, the market is around here. We tapped into this area of interest. So as you can see from this point here, that is when the market gave us those lower lows and lower highs. As you can see from this point, we had a low, lower high, lower low. Let me just check if it's the 3 candle pullback. So as you can see, we didn't have any 3 candle pullback around that point. So which means that this is your lowest point around here. Then that is when we got the change of character at the top, just like that. Change of character within here. Then after having the change of character, like I told you, you look for an area of interest. But like in this one here, you can already see that there is no buy to sell candle. There's no sell to buy candle up until this area here. So you're gonna draw out like each and everything that's going on here, just like that. Then you target the previous highs, just like this. So you take your entry around here using a buy limit, then your stops should be just below here. And then another key tip that you can use whenever you're mapping out structures or your supply and demand, you just have to wait for the market to take out the previous low, just like that. This is liquidity, guys. For those who don't know, this is liquidity. Then you're targeting the previous high, just like that. So let me just zoom out. Let's go back to the 15-minute time frame, just because the 15-minute has a quite clean, guys. It's quite clean. You can understand it. So as you can see, sorry about that, guys. So as you can see, the market reached our area just nicely, guys. So this was a 6.4 trade. Then after that, we have your new break of structure, just like that. And then you have to wait for your sessions, guys. This is a New York session trade, guys. New York session trades These are New York session trades, guys, as you can see right there. So around here we had a break of structure, which means that you have your new trading range from this high here to this low here, guys. So to this low here, so that's your trading range. So around this point to that point, you have your new trading range that's going on. So after even the break of structure, you need to map out your area of interest. So as you can see here, we had a fair value gap, which means this is your demand zone. First demand zone, you can have like multiple demand zones. As you can see, after around here, we also had a sell to buy candle, which is around this point here. Just like that, you can just extend it. Then as you can see here, we also had liquidity, guys. Now relatively equal highs, equal lows, sorry about that, relatively equal lows. Then the market tapped into this area of interest, so which means whenever we tap into that area of interest, we're targeting the previous high, just like that. So you can just switch to the 1 minute time frame so that you can see the trade idea that went on this one. And I hope you enjoyed these videos, guys, and learn from them, just because I take a lot of time trying to share some content with you guys, but like I make sure that whenever I drop content, it's valuable to you guys now. So as you can see here, the market was pushing down internally, like I told you now. So as you can see here, we have your low, your lower high, then you have your lower low, lower high, then around here we have your lower low. So this is your lower high, this is your lower low, lower high around here, then this is your lower low. So just like that, we expect a market structure shift to go on around this point. But like this one was a weak creation, whereby you can just take this one with a grain of salt. As you can see, this is a weak creation, this is the low here. So around this point, this is where we got the break or the change of character. Then going back, you need to map out like your areas of interest. So as you can see here, we created liquidity, relatively equal lows, just like that. So like I told you, liquidity is a very big concept when it comes to smart money, guys. So we can just zoom out, look for our buy to sell candle, make sure that there is a fair value gap within that point. So we have a fair value gap here, we also have this area here. So you can just map out the fair value gap first, extend it to the current market structure. It's because the market taps into fair value gaps, obviously. So around here, we have that fair value gap being tapped into, and I didn't analyze these things before sharing them with you guys. It's just knowledge. When it comes to smart money, I'm good at it. So as you can see right there, the market tapped into our area of interest, and it just pushed to the upside very nicely, guys. And I hope this video was educational, but like you look for a break of structure either to the upside or to the downside, you just have to look at the overall market structure. For example, this was the trade for today. This was the trade for today, as you can see right there on the 18th. So we had a break of structure here to the upside, showing that the market is pushing up. Then we had a change of character, taking out the low here. And after taking out this low here, we already know that our area of interest should be around here, firstly around here. And then if you didn't get a confirmation here on the one minute time frame, it means that we have an extreme zone. We also have this as our imbalance, so imbalance at the bottom. Then we have this area of our buy to sell candles, guys, just because you're looking for sales. So after that, we switch over to the 1 minute time frame. That is where you're going to take your entries. So just like that, we have our trade idea going on. We tap into that area of interest, then that is when you look for your market structure shift, guys. Now, so as you can see from the current structure, we had your high, your low, high, low, and then we had a lower high, then a lower low, which means that's your change of character right there. We failed to break the high, then we changed character around this point here. Then after changing character, you look for your buy to sell candle, just because you're looking for selling opportunities. So you can just do this, zoom out, then you can obviously see that we had a fair value gap around this point here. Then after even the fair value gap, obviously you can just take everything or use like this area here, only this area here, just because that's the order block. And then your stop loss should be just above areas of interest. So your sell limit should be here, stop loss just above this area, 4.2 pips. Then after that, you wait for the market to push to the downside. And after even the change of character, you can obviously see that we had another trade idea. So this is the break of structure. Then you look for your area of interest. So we zoom out, you can see that this is a fair value gap, and then this is the buy to sell candle, which means that you can just draw everything out just like that. Then you have your market tapping into an area of interest. Then we push to the downside, targeting the previous low, of which it's this one here. This was a nice setup. I don't wanna lie, guys, for around, and the risk to reward is very high on this trading strategy, guys. So as you can see, we have like 12% on the first idea. Then the second idea should give us around maybe 10 or 11 if I'm not mistaken. But like this would be a monstrous trade, guys. 3 pips, I think it's 20 or 20 something. So yeah, 16 pips, 16% on this one using a 3 pip stop, 4.2 pip stop with a 12%. So these two will give you like almost, let's see, 20, 26, 27 pips, 27%, guys, on these two trades. So yeah, I'll see you on another video, guys. I hope you enjoyed this one. I'll see you in the next one. Yes, sir.